Hey guys, Daniel here and welcome back to another video. Here today we're going to be doing an update on Facebook stock, ticker symbol FB, and why in my opinion it is the perfect candidate to 3x over the next 5 years here. In this video I'm going to go through the numbers, the valuation, projected revenue growth, and analyst expectations to come up with a proper price target 5 years out. This isn't going to be too much of like an analysis video. If you want to see a full fundamental analysis on Facebook, I made one a few months ago and it's still valid here today. I'm going to make it the first link in the description if you're interested in that sort of thing. So Facebook, in my opinion, 3 years from now, or rather 5 years from now, has a very good chance of trading at $2 trillion, rather in market cap. And this is a stock that has been rather flat for the past 6-7 months. Since about late July, early August, Facebook has traded sideways. And this is as the market has actually increased. The market's increased pretty significantly since the summer, yet Facebook has stayed flat. At that same time, fundamentals have been improving drastically at Facebook, them absolutely blowing it out of the water with their Q3 and Q4 earning reports. So next here, we're going to take a look at the numbers, and this is my projection here when it comes to Facebook. I factor in a few variables here, and I'm going to go through exactly everything I did and give you guys the result. So one thing that I'm assuming here with Facebook is an annual growth rate with revenue of around 20%. Now, I think this is fairly conservative given that analysts are expecting around 20.5% revenue growth on average over the next 5 years. I think this is very realistic. Social media is only going to continue to grow. And again, I'm not going to go too much into their business, but I think they have a big opportunity to expand Instagram, WhatsApp. Once they start finding a way to monetize WhatsApp, I think that's going to be a big revenue stream. With Oculus, that's at the forefront of virtual reality, an incredible emerging market. I think 20% revenue growth is honestly kind of conservative, and given the fact that they're known for blowing it out of the waters when it comes to earnings, I think that kind of sets a good base, and then Facebook can only get better from there, which is good because I like to be conservative with my estimates, and being able to do that here with Facebook is really good. It makes me feel really good as well. So next, I've calculated a percentage of revenue that goes straight down to the bottom line, net income. I put this down at around 35%, meaning every $100 that they make in revenue, around $35 goes into net income. Now, this is fairly in line to their net income for both 2019, 2018, and a few other years. I think they'll be able to maintain this, and as they scale, I truly do believe that Facebook will continue to become a more profitable company. I mean, their gross margins are already at like 70, 80%. So considering that, this isn't a company with a ton of expenses. So I think 35% is very achievable. And honestly, I wouldn't be surprised if Facebook eventually reported, maybe 40% of revenue going down to net income. And that would be absolutely huge when it comes to the price target. We'll kind of jumble around with these numbers here after I'm done explaining this. So given this, we end 2025 with around $222 billion in revenue. I mean, that's over a double up of what revenue they did here in 2020. I'm not sure what the exact number is, but it's under 100 million. In terms of net income, that would leave us with around $78 billion in net income. In my opinion, this is very reasonable. I mean, Facebook is just an incredible company. They've got incredible platforms. And with this, kind of in line with analyst expectations, I think this is very achievable. So next year, I put a price to earnings of around 30. This is price to earnings ratio. And the reason I chose 30 is because Facebook is already a very undervalued company when it comes to their price to earnings. I think they're trading at around a 24 or 25 trailing 12-month price to earnings. And I think a fair price to earnings for Facebook is around 30. I mean, the reason they trade so cheap even now is because of those concerns with the DOJ and Facebook getting split apart. But honestly, I think that's something that's actually beneficial to the company. I think it's got a bad rap. Facebook getting split up would unlock a lot of shareholder value, because if you imagine it, all these different parts of Facebook are worth more alone than they are together. Oculus would be worth substantially more alone than as a part of Facebook, because it's a company growing revenues hundreds of percentage points and is at the forefront of the virtual reality revolution. And the same could be said for WhatsApp or Instagram or Facebook. I think alone they'd be worth much more. So that's kind of my thoughts regarding their valuation and why it is so low. I think 5 years from now, we'll get our answer. Either they will get split up or they won't get split up. If they do, that unlocks shareholder value, and we're going to have to change this all up because we'll have, just separate businesses, literally. And if, it doesn't get split up, that's great because that eliminates that concern of them getting split up, since if it was going to happen, it's probably going to happen over the next 5 years here. So I'm putting a price to earnings of 30. This is significantly cheaper than companies like Apple, Google, or Microsoft, even though Facebook is the fastest growing company out of them all. I mean, Apple trading at 35 price to earnings, Google trading at 36, Microsoft trading at 36. These are all companies growing slower than Facebook, yet they trade at richer valuations. That's what makes Facebook so intriguing. And I think at 30 price to earnings is very fair and very conservative as well. I mean, you could also make an argument that the market is pretty frothy where it is right now in terms of valuations. So you can also factor that in, that maybe Apple should be trading at a 30, not a 35. In that case, I still think a 30 is fair for Facebook. So given all of those numbers, we can use that forward PE, multiply it by the net income, which gives us a market cap of around $2.3 trillion. Now, currently, Facebook's market cap is around $767 billion, significantly lower, and trading at a share price of $262. Now, if we factor all of this in, the net income, the revenue, the price to earnings ratio, we get a price target, 2025 price target of around $799 per share. And that's upside of around 205%. Now, this is what makes Facebook so interesting. They're such a conglomerate of a company. I mean, an $800 billion company almost here today. And a company that, could be worth 200% more than it is here today, 5 years from now, seems like a very intriguing opportunity, especially given the minimal risk when it comes to Facebook. You're getting the same risk that you're getting with Apple and Google and Microsoft and Amazon, with a much cheaper valuation and with much more growth. So I said this before and I'm going to say it again. I think Facebook is the big tech company to own. It is a very cheap valuation. It's trading significantly lower than the others, both in terms of market cap and considering revenue. I think it's a great opportunity. At this point, it's just you as an investor that has to make a decision. Is Facebook right for me? Would I be happy getting a 200% return over time? Given the risk, I think it's a great risk-reward ratio, but these are questions that you have to ask yourself and really kind of judge your investment philosophy and if Facebook is right for you. Another thing you have to ask yourself is, what if these things don't really come to fruition? There's a big chance that Facebook might not hit these prices. I mean, in my opinion, $799 is fair value for Facebook 5 years from now. But does the market always factor in fair value? No. There have been a lot of instances with companies that have been significantly growing revenues, possibly profitable, that have had their stock prices not really move. And that obviously is one of the risks when it comes to Facebook. Now, in my opinion, I'm willing to take that risk, as I think Facebook is just a company you can't ignore over the next 5 years here, and they're at the forefront of the digital revolution when it comes to social media. Now, these numbers here, in my opinion, are a base case, and we can kind of play around with these and come up with some higher numbers if Facebook were to, for example, succeed in increasing their revenue or becoming more profitable or trading at a little more of a rich valuation. Let's play around with these numbers here. So I'm expecting revenue growth of around 20% over the next 5 years here. Analysts are expecting around 20.5%. Now, Facebook is a company that is known for absolutely blowing it out of the water when it comes to earnings. So let's say that, for example, they get around 21.5% revenue growth. Let's say. That's not too much, right? But bam, that automatically increases everything. That increases the revenue, that increases the net income. And that raises the price target, or rather the upside on the price target, from 205% upside to 220% upside. That small of a difference can change something so big. We can do the same thing with net income. I wouldn't be surprised if Facebook maybe gets around like 40% of their revenue going down to the bottom line. Is that going to happen? It very well could. This is just kind of a guesstimate when it comes to their net income. We don't really know what it's going to be like 5 years from now if they're going to introduce another business. Will that business maybe need a little more cash? We don't really know. All we can do is estimate. I think 35% is very conservative. So let's say we get maybe 40%. That goes up even more. That price target now gets raised to $959 with upside of 266%. Then you can make an argument. I don't know, if maybe the business is going so well and they're such a profitable company that they demand a higher valuation. So maybe they demand a 31 price to earnings. Or maybe they demand a 32 price to earnings. Right now we got over $1,000 per share. These are all very small changes that make a significant impact when it comes to Facebook's share price. And it's why it's such an interesting opportunity. Now, obviously here in this situation, we factored in the best case scenario for all of them. But let's say maybe they traded out at 31 price to earnings. That raises the price target by about $20. If we raise net income by maybe, 2-3% to around 38%, that increases it a little bit. So it wouldn't be surprised if Facebook hits just one of these and blows it out of the water. Let's say they grow by 22% or 23%, which would be absolutely incredible. Or let's say they're a little more profitable than they were before, right? Or they're trading at a richer valuation. There's so many variables to take in here that can really change the valuation of Facebook. And this is why it's so difficult to value, or rather estimate where a company will be 5 years down the road. I mean, this is just kind of, in my opinion, where Facebook should be trading at. But it could trade significantly higher and it can trade significantly lower. It all depends on company management, how well they do, and how well Mark Zuckerberg, the lizard, manages the company and manages to expand and grow all the platforms that Facebook controls. So I hope you guys enjoy this type of content. If you do, make sure to drop a like. If you own Facebook or want to talk about it, make sure to drop that in the comment section down below. Thank you so much for watching and have a great day.